Assalamualaikum warahmatullahi wabarakatuh. So my friends and I from Group 7 will present you the article reviews about Forex trading. First and foremost, my name is Akmal and I will introduce you about what is Forex trading. Forex is stand for Foreign Exchange Market, and or we can call it as Forex market. That is the global marketplace where currencies are traded against each other. It is the largest and the most liquid financial market in the world right now. Participants of the Forex market include banks, financial institutions, corporations, governments, and individual traders. The next slides will present you the variety topics regarding Forex trading and its relation to Islamic financial principles. I will pass the floor to the next presenter.
Assalamualaikum and hi, I am Nurain Natasha and I will be presenting article 1 and 2. The first article is from Forex Trading in the Perspective of Islamic Economic Law written by Bagas Herit Yakska. The paper discusses the three legal systems in Indonesia, namely the civil legal system, the customary law system, and the Islamic legal system, which form the basis for legal provisions in the country. It also explores the topic of forex trading, includes its definition, the role of supply and demand in shaping exchange rate, and the potential risks that uncertainties associated with forex transactions. The Indonesian Ulama Council has issued a fatwa stating that foreign currency buying and selling transactions are permitted, provided they are not for speculations and are based on the need for transactions. The exchange rate must be the same for transactions with similar currency values, while transactions with different type require using the prevailing exchange rate at the time of the cash transaction. The study also emphasized the importance of analyzing the conformity between forex trading practices and the principles of Islamic law, considering factors such as the nature of the transaction, the presence of speculation, and the adherence to ethical guidelines. According to this paper, Forex facilitates international trade by providing a balanced value when currency exchange occurs, ensuring smooth international trade operations. It allows individuals to participate in investment activities and trade currencies based on fluctuations in currency values in the world market. Next, the forex market has a high level of liquidity with a daily turnover exceeding 3 trillion USD, indicating significant public interest in buying and selling forex. However, this paper also discusses the disadvantages of forex, which are forex trading involves a high level of risk due to the volatility of currency exchange rates, which can lead to potential financial losses. Forex transaction may involve elements of speculation, which is prohibited in Islamic economic law. Lack of legal certainty and clarity from both the perspective of Indonesian law and Islamic law regarding forex trading can create uncertainty for participants. Moving on to the next article, which is by Al-Saf Transaction in Sharia and its application in contemporary Islamic finance, written by Yusuf Sultan. The paper discusses the concept of SARF transaction in relation to the exchange of currency and gold, particularly in the context of forex trading and investment in gold or silver, both domestically and internationally. It emphasized the need for Sharia compatibility in forex trading to ensure compliance with Islamic principles and provide insights into the stance of Sharia on forex trading and gold investment. The paper also highlights the role of technology in facilitating forex trading globally and the importance of managing liquidity for Islamic banks and financial institutions through forex trading. It references the resolution and fatwas issued by the Islamic Fiqh Academy and other organizations regarding the Sharia validity of forex trading and the prohibition of certain practices, such as forward currency contracts. Moving on, there are a few Islamic principles for forex trading that have been discussed in this paper, including forex trading in Islam is subject to certain principles to ensure compliance with Islamic law or Sharia. The underlying contract in forex trading is bay al-sarf, which involves the exchange of currency at a determined price based on supply and demand factors. Islamic principles requires that Forex trading does not involve any element of riba or interest, and horror, which is uncertainty. Financial institutions acting as agents in forex trading should ensure transparency, fairness, and adherence to ethical standards. The International Islamic Fiqh Academy and other scholars have issued fatwas and resolutions to guide Islamic financial institutions and traders in conducting forex transactions in compliance with Islamic principles. Next, Sharia analysis of forex market in Bay al-Sarf transaction. Sharia does not permit speculating in currency as it can cause price fluctuations and currency instability. Forex trading is considered permissible if it adheres to Islamic principles such as avoiding riba and gharar. The underlying contract in forex trading, or buy al sarf, involves the exchange of currencies at a determined price based on supply and demand factors. Managing exchange rate risk is a valid reason for engaging in forex trading, but it alone is not sufficient to deem it permissible or haram. The next article will be further discussed by the next person.
Assalamualaikum sir, I'm Amira and I'll be presenting the two articles that have been reviewed by me. So the first article is AI in determining factors for forex prediction model. This article emphasizes the paramount importance of selecting the right indicators for accurate predictions and proposes a more comprehensive approach to overcome the current limitation in decision-making system. So, in the quest of precisions, the article suggests a shift towards predictive model grounded in causal relationship rather than coincidence. So, this involves employing methods for pattern recognitions and identifying indicators that might not immediately apparent. So, forex prediction is not a simple task, and it requires the consideration of multitude of factors simultaneously. And distinguishing the relevant indicators amidst this complexity becomes crucial for success. This methodology explored in the article go beyond the norm because it includes a reliance on scientific economic theory. So this approach is seen as valuable contributor to refining forex prediction models. So in conclusion, this article highlights the potential impact of possessing a highly accurate and widely available forex prediction model on the market. It promises enhanced results and inventions a future where such models serve as a foundation for further indicator selection tailored to any specific cases. Moving on to the next article entitled A Review on Recent Advancement in Forex Currency Prediction Algorithms. So the objective of this article is first to analyze and evaluate recent words in Forex currency predictions, and second to explore the application of neural network models, pattern-based approaches, and optimization techniques in Forex predictions models. So machine learning method has been widely applied in Forex currency predictions. And in the year from 2017 until 2019, neural network emerged as the most referenced method, closely followed by support vector machine or SVM. And in this article, it also proved the effectiveness of machine learning in predicting forex currency prices, as its implementation had marked a significant stride in the accuracy of this prediction. And a fascinating point raised by the author is the potential for optimization technique to elevate the game. The combination of optimization technique-based system with a powerful tool like genetic algorithms and neural network is suggested to yield higher return on investment or ROIs and enhance the overall accuracy of forex prediction. And this article casts a wide net, reviewing a total of 39 published research articles conducted in 18 different countries. And notably, the highest number of contributions are coming from India. And that is all from me. Thank you.
Hi and Assalamualaikum. I am Ahmad Lutfi and I will continue to present for the fifth article, which is microstructure of foreign exchange market in Malaysia. The first point is determinants of foreign exchange rate in Malaysia. So the research aims to identify the factors influencing the foreign exchange rate in Malaysia. The study covers the historical development of the forex market and its current status in Malaysia. The findings reveal that the foreign exchange market in Malaysia is influenced by global economic condition and market sentiment. And the second point is foreign exchange risk exposure in Malaysia. The study assesses the significance of foreign exchange risk and exposure for sample firms in Malaysia. It concludes that forex risk exposure in Malaysia may not be significant for sample firms due to various reasons, including economic condition, exchange rate evolution, and time variation. And the third one is impact of political events on the forex market. The study evaluates the impact of selected political events on the foreign exchange market in Malaysia. It aims to assess how political developments can affect exchange rate movements in the Malaysia forex market. So for the next point, which is forex intervention in Malaysia. So the paper discusses the motive for and recent trends in Malaysia forex intervention and their effectiveness. It highlights the evolution of the approach to forex intervention in Malaysia and efforts to improve the management of forex volatility. So the last one, which is exchange rate and the Malaysian economy. So the study provides insight into the exchange rate and its impact on the Malaysian economy. It focuses on the average exchange rate and its implication for the Malaysian economy. So that's all from me. I will pass to the next presenter.
So let's move on to the sixth articles with the title of Critical Evaluation of Compliance of Online Islamic Forex Trading with Islamic Principles, written by Omar and Jones. So this study aims to investigate the differences between Islamic forex trading and normal forex trading that is prohibited in Islamic finance law. Online Islamic trading or halal forex trading refers to engaging in currency trading while adhering to the principles of Islamic finance that includes no receipt of interest, which is riba, no uncertainty, which is gharar, and no gambling, which is mashi. And the study mentioned that Islamic forex trading is developed to be free interest trading, and some fatwa says that trading is allowed in Islam as long as it did not violate the Islamic finance law. However, in the end of the studies, it highlighted the extreme rejection of the use of this trading, although some scholars stated that it is permissible in Islam to prevent future violation in Islamic laws. That's all from me. I will pass the floor to the next presenter.
I am Iraisha and I'm going to discuss on the next article titled Trading in the Foreign Exchange Market, a study on purchase intention. So firstly, this article is discussing about how consumer behavior in the forex market is multifaceted and dynamic field of research that centers on the complex decision-making mechanisms. The article explores the significance of trust, context, content, and trading platform infrastructure through an examination of the factors that influence consumers' purchase intentions in the forex market. The writer also mentioned that to drastically changing the forex market's environment, the emergence of e-business and the internet's widespread influence have brought about increased customer satisfaction, efficiency, and speed. Moreover, the relationship between technological advancements and consumer trust becomes an important issue. So, in conclusion, this review essentially highlights how crucial trust, context, content, internet usage, and website infrastructure are in influencing consumers' purchase intentions in the fast paced, technologically driven forex market. Alright, moving on to the next article, which is Survey of Forex and Stock Price Prediction Using Deep Learning. This article is about the applications of deep learning have demonstrated higher accuracy and return in the field of financial forecasting and prediction. For comparison analysis, the researchers in this survey have chosen papers from the Digital Bibliography and Library Project (DBLP) database. The most popular performance metrics, which are root mean square error, mean absolute percentage error, mean absolute error, mean square error, accuracy, Sharpe ratio, and return rate are used in the survey to display the results. Lastly, the author draws the conclusion that deep learning based approaches have become increasingly popular in financial modeling in recent years. So that's all for my part. I'll pass it to the next presenter.
For the next article, It is titled Impact of Sharia Compliance Status on Firms' Decision to Practice Forex Hedging. The study investigates whether the Sharia compliance status of firms negatively influence their use of foreign exchange hedging instruments. Preliminary results show that none of the Sharia compliant firms report any use of Islamic hedging instruments. This concludes that investors must look beyond interest-based riba in mixed business companies to ensure Sharia compliance, and that Sharia compliant firms should disclose their use of Islamic or conventional hedging instruments. For the last article, it is titled Forex in the Eyes of Sharia, a qualitative analysis in the Malaysian context. Most of Malaysian respondents are aware of forex trading but have never attempted due to a lack of knowledge, skepticism, and doubt. From the study, forex trading incorporates forbidden elements such as usury. It remains forbidden unless it adheres to Islamic principles and guidelines. The study also highlights the opinion of contemporary scholars and the verdict of nation ulama, stating that forex trading involving interest and uncertainty is not permissible in Islam. Based on the study survey questionnaire, respondents believe forex trading carries risks and is seen as a form of speculation rather than traditional investing.
Hello, Assalamualaikum. I am Muhammad Hazri and I will be presenting about the case study. So our case study is the Sharia compliance options to Forex. So as we all know, the Forex market has been historically viewed as speculative. So this finds it difficult to comply with Sharia laws. Then, few years ago, a number of Islamic financial institutions offered some options to Forex that are Sharia compliant, which are Urban, Commodity Murabaha, and Wa'ad. So, the analysis of these three demonstrates how flexible Islamic finance in the Malaysian financial system. Although it has been disputed historically that uh, by Al-Urbun shows adaptability in risk management and is backed by the Hambali School and OIC Fiqh Academy. On the other hand, commodity murabaha is one common form of Islamic finance that satisfies demands financially and upholds Sharia at the same time. Wa'ad provide future transaction security in accordance with Sharia. So by providing these strong options for traditional instruments and adhering to the tenets of Islamic finance, this example of these three is actually strengthen and broaden the Malaysian financial environment. The lesson is that these products, while carefully crafted and controlled, meet a variety of financial demands while adhering to Islamic laws. So the existence of these alternatives really shows the flexibility of Islamic financial system in Malaysia, which will promote inclusivity and constructive information within the financial system itself. That's all from me. Thank you.
Hi, it's me again, and I'll be presenting the last part, which is the conclusion. So, the literature on Forex in Malaysia provides insights into the determinants and implication of exchange rate movements in the country. Studies indicate that Forex risk exposure in Malaysia may not be significant for sample firms, but exposure may vary depending on economic condition, exchange rate evolution, and time variation. Research on the determinants of forex rates in Malaysia highlights factors such as lending interest rate, foreign exchange reserve, and the export-import ratio. The impact of political events on the forex market in Malaysia has also been studied, and a hybrid model approach has been employed to analyze the nominal exchange rate determination in Malaysia. Overall, the literature offers a comprehensive analysis of the forex market in Malaysia, providing valuable insights for firms, investors, policymakers, and researchers. So that's all from us. Thank you.